All right, hello everyone, and welcome back to Neely FX. My name is Michael Neely. This is the channel where I talk about foreign exchange trading and building expert advisors for the MetaTrader 4, MetaTrader 5 platforms. Once we get to that stage of stuff, and also just kind of journaling my journaling a journey, as it were, and the world of proprietary trading or prop trading, working with prop trading firms. So this one's going to lean more towards prop trading firms a little bit more because I have signed up with two of them. I have not committed to any of the tests yet, which will be coming up probably the next few weeks. But I did take another step into becoming a prop trader. So first, since we're talking about actual trading and real trading events, let's talk about the risk disclaimer. So we've got to talk about this by law because I'm in the United States, and these are just some of the regulations that we have to put up with. We get to deal with. We get to. It also helps keep crooks out too, to some degree. So here we go. Let's read this together. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, although I used to be. And I'm trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high degree of risk of losing some or all of your investment capital. I know, I've done it a few times. Now, only trade with funds you can comfortably afford to lose. Comfortably afford to lose. So don't come into the Forex markets thinking you're going to generate rent for next month. The pressures are just too high and you'll end up making stupid mistakes. CFTC risk disclosure. This is required by law in the United States. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss or some or all of your investment capital. And by full disclosure, I should tell you that I do have funds in other places in the market besides Forex, so this is not my bread and butter. And I also have a day job, so that's right now. So until the point that my prop trading would overcome my day job, which is going to be quite a ways for it to go, I will have a day job. So let's get into the next little chart. Let's see what we got going on here. First thing I want to do is come here, and there I am in my new stylish summer shirt because it is summer. If you hear a low rumbling or low humming noise, that's because I have a fan down here. It's not your audio, it's my fan because it's going to be 90 degrees here in Maine today, and I live in a house that's over 100 years old, so there's no central heat and air. So it means that you turn on fans. Let's see. So let's get out of that real quick. First, I wanted to go over what we did. Well, better yet, let's talk about. I haven't changed anything since the last video on June the 22nd. So let's talk about some things here in the euro. As you can see, got the monthly trend resistance line right there. And you see it gets all jumbly right here, but you do see a little bit of a breakout right here up to 117. Broke out at about 116,338, and when we get even tighter in that time frame, you'll see that it's even a better opportunity to trade, which would have been not there, here. Because here's that 4-hour trend line right here, and you see a breakout happen right here about 1577. So that would have been a great time to jump in this trade, and then as you can see, we would have gotten about 260 pips out of that. So that is a trade I missed because I was not paying attention to the euro. I was hyper focusing on my favorite, which is the dollar versus the yen. A lot of strange things going on with the dollar and the yen lately because of the trade war with China, or the tariff talks, or however you want to think about it, of what's going on with China, as well as some other things. Because China is the big player in the Japanese currency world. And let's see what we've got going on there. Well, first, let's talk about a trade I did take. So I did take a trade here. Took it on, as you can see, it was profitable. And this is my demo account, although I place the same trades in my live account as I do my demo account. So it's not like I'm trading, footloose and fancy free the demo account that I don't care if I lose anything. Because if this trade loses, my live account loses too. And my live account has real money in it. It has money that I earned and put in there myself, my own investment capital. But this is as close as I can get to it. First, want to talk about position sizing too. You want to get a position sizing that's going to give you the best profitable chance for profiting. As you can see, I have a 42,000. Well, as you can see, I've got I'm down $1,900 on a $50,000 account. It's actually not too bad, and very recoverable from. But my balance is let's talk about my balance. Go back over here. My balance is $47,772, which is $47,000 in my demo account. Notice that is a demo account, and now I'm being accompanied by Henry, the Forex trading parakeet. Come here, little birdie. Oh well, he doesn't want to play. By Henry, the Forex trading parakeet. So let's talk about position sizing. How I choose my position sizing. This trade was not the best trade in the world for a couple reasons. One, my exposure was, I kept it to one lot on that. Let me go back down here. It was down to one lot. Now, if you'll notice, I'm trading 2.75 lots on this one, because that's about 1% of the account. Now, how do I figure that? I come over here to Daily Pips. Daily Pips, I've almost completed the entire course. It gets kind of boring in the end, but I've worked on it for years, and I've just about completed the entire Forex trading baby trading course, and I've learned a lot in this. There he is. Learned a lot in this course too. I highly recommend taking the Learn Forex course. The School of Pipsology, as it were. Take that course. It's really good. It's going to take you a while to do it. It's going to determine how serious you are about trading. Let me see. But here we have the tools section right here. We'll come down to position size calculator right there. And this is how I choose that position size. So we come over here and let's choose the position size real quick. So I got 47,772 is my account balance. Risk percentage, I want to risk 1% of that account. Stop loss, we'll call it 25, because I'm getting really close to stop losses to, of course, limit my, there's Henry right there, to limit my losses, and we're going to be trading the dollar versus the yen on this one in particular. Current ask price, we'll call it 144.50. I think it's pretty close to what it was. I'm not getting exact on that. So 2.76 standard lots, and that is what I'm choosing. That's the number right there that I'm picking to go with for my demo account. My live account is much different because I do not have $47,000 in my live accounts, either one of them. So we're just not gonna do that. Let's see. So that's about all I want to talk about as far as position sizing goes. So let's go back to the real trade that took place right here. Took place on about 6:27. And I was kind of had to chase this trade around a little bit. Let's go back to here and switch back over to the USDJPY. And I want the Forex.com account because that is the broker that I trade my live accounts with. And then we're going to replay. Well, we're going to replay about to, let's go here. I think we'll be able to see what what happened as far as this goes here. So the live account trade has me coming in. Pardon me. The demo account trade has me coming in at 145. Whoa. Yeah, there it is. 145.36, and it was a buy. So let's see where that happened. So this is against, it's kind of against the grain on that trade. We're going to do it anyway. We're going to go here a little bit. We're going to watch and see where the potential was for the trade, and there it is, 145.50. And I got in at 145.36, but I was watching it, seeing if it was going to bounce above this resistance line. Oh, wait a minute. Is that right? 145.36. So I entered it about here. Oh, that's where it was. That's right. Because I was looking for it to get over that resistance line. Okay, so here, let's go ahead and put a little pause action on that, and then we're going to go here and 36. This is where the trade, where I entered the trade, and we'll see it go break beyond. So you can see it's all over the place. No, that's not right. I think it was right in here I placed the trade. Because that's the only possible way I could have done that. 127 or June 27th. The time is going to be a little bit different. Oh, it was the 25th. Oopsies. Okay, great. So let's go back here and do that again. So we're going to go back here and we're going to replay again. And we're going to start the replay about right here. So this is what I really want to do here is just test the whole theory. I'm still in the testing theory range for trend lines because it's I love the work that Tory Trades has done as well as James Stanley. They're both not buddies of mine. James Stanley I interact with on X sometimes, but let's see what we got going on here. So here is where I was eyeing the trade to see if it broke, and that's where it broke right there. It broke here. And then I kept the stop loss pretty tight on that because I didn't see it going very much further than that. Because there's a lot of resistance here, as indicated by these resistance lines. But I was able to get a few pips out of there. I think I ended up getting 30 pips out of there. So bought at 50 pips, close to 50 pips. So I entered the trade at 145.36 and was stopped out at 145.80, which gave me a profit of 296.87 in my demo account. My profit in my live accounts was much less, but it was a profit nonetheless. So that's the only trade I got in the last couple of weeks. Because it has been a holiday weekend, I'm going to go ahead and let this play out. And then we'll get started on this next week. What we think might be happening this next week. On a side note, my other project, the getting my Ubuntu machine up to 24.4.02, I finally got it done. So that's going to be part of the tech part of what I do, because I do like tech. I'm just sitting here watching this play out and just staring at the trade that could have been, which is right here. Because I do have a day job, I don't always have time to monitor the markets as closely as I possibly should, but we do have a lot of things going on. I also want to show you another sweet trade that would have happened. I think I already talked about the euro versus the yen. Let's talk about the euro versus the yen real quick. The euro versus the yen, another key performer, or another key attribute I'm looking at, another key pair I'm looking at, because these are high liquidity pairs. That's why I chose them. It's because they're some of the highest liquidity pairs in the Forex world. If you're going to have a breakout, it's going to be here, and you're also going to have a lot smoother trading. You're not going to run into the part where you can't get an order filled because of liquidity. You're also not going to see gaps between bars of 20 pips. Like the one day I decided to trade the NSD versus the dollar, the Kiwi as it's called, the New Zealand dollar versus the regular dollar, the American dollar. And there was a huge jump when their rate release came out. It was unbelievable, but it's far too much for me to trade, far too risky for me to trade at this point. Maybe later we'll get into that, not right now. So here is the 4-hour trend line. I'm on the 4-hour chart for the dollar versus the yen, and the 25th, the same day we had that trade, where I went north on the dollar yen, we had this. We had a very nice move of the dollar yen, the euro versus the dollar, up to about 118.30. So that would have been a 260 pip win in theory if you got a piece of that, maybe 200, but still 200 pip win. That's a pretty nice little payday. That's one that I missed. As you can see, there's lots of buying action going on right here. If you bring in the smart algo, smart money concepts, a lot of buying action right here in the euro versus the dollar. A little bit of a weak high, a little bit of equal heights right there to the bearish side, and then some more bearish buying activity happening here potentially, but again, this is all fairly weak. This is much stronger than this is, so I do expect this to go north during the coming week, as I do expect the dollar versus the yen to go south on a grand scale. So let's get in here and we'll talk about something else I want to talk about that I don't ever talk about Never talked about it before. We're going to draw some lines on here for the first time. These are bond rates, bond yields. If you'll recall, if we go back to the daily chart, I think we can see it clearly. In 2022, maybe not, I may have to go back to the monthly. 2022 is the last, is when I first started getting my feet wet in Forex again, and I got trounced upon by the markets, because what was happening was this little gem of an event right here. We had bond yields that were, how do you call it, soaring from their previous lows. This is 2022, and this is the 2-year bond yield, and this is about the same time I was trading. It was in the that I started trading again in February, and this is the thing that I always missed. I was listening to somebody online on social media saying, "Oh, the reverse carry trade is going to fall apart. We're all doomed." Blah blah blah. Don't listen to people like that. If they're making sense, then yeah, listen to them. If not, then you want to make up your own, come to your own conclusions. But here is the bond yield, and I traded against this and lost a lot of money doing this. So the dollar versus the euro went down significantly. The the dollar versus the yen went up significantly. The euro versus the dollar. To get this right, why? Because bond yields. Now the bond yields soared during this period. This is the time of high inflation here in the United States and in Europe, where inflation was just gangbusters, and it finally topped out about almost 5%, which is from the 2-year bond yield to November of 2022. That's astronomical. And then it continued to go up even further, up to the 5s, and then it just collapsed after that. That was right around March 2023. And give it another big jump right through there. But now we're watching the bond yields come back down. So this is going to give us a hint. If you think of the bond yield rate, especially the 2% bond yield rate, as the best indicator of where interest rates are going, then that can help you with your trading. Now here's the dangerous part: it's when the bond yields start going sideways. Bond yields start going sideways, there's no telling what's going to happen. That's really the situation we're in right now. Is that sometimes they're up, sometimes they're down, and you can't tell what direction they're going in, and that's fine. But that just gives us more opportunity to get into ranging trades. And short-term ranging trades. Do not try to trade the range long-term. You will lose. But the yield curve, we are looking at a lot of, that's the 2-year bond yield. And I don't see it breaking out to the south. I don't see it breaking out. Let's draw a couple trend lines in here real quick. Do one right here, down to here. We'll call this one the on the daily daily resistance trend line, and we'll make it green. I think that's how I did the other ones. Let's have a look. Nope, support is green, resistance is red. So we'll go back to the other one real quick. There we go. I think I just go back like that and do it, right? Nope, not gonna work. So come back to USO2Y. O2Y. Nope. 02Y. That's better. And I think this is the one that I have that on. And it is. So this one needs to be red. Right there. And then we'll do a support one right down here. Daily support, since I'm not actually trading the bonds. Oh, hold on, let's move this. Backspace. Shortcut, if you hit backspace, it'll erase the last thing you drew, just like in MetaTrader 4. And this one is, get that one right there. It likes to trigger on the close, on the low. I like to placing it, my trend lines on the close, not the low. I think it gives us more information. And that's the green one, and that's this, we'll call this the daily support trend line. And here we go with that. Whoops, got space action in there. There we go. So we're looking at, again, it's mid-range right now. Nobody really knows what direction it's going in, although it does look like it's going to respect this daily resistance trend line and start trending lower. That means that what we're going to start seeing is the dollar versus the yen lower and the euro versus the dollar lower if this trend continues. We also see a lot of buying action down here. Well, let's see with bonds. The bond yield is inverse from the bond price. So we'll see a lot of selling action on the bonds, which makes the yield go up here, around this area. So we're not back down to the 2.4%. I think is what I remember the bond yield being February of 2022. But that's what we've got going on there. So think about. It's kind of a crash course in the relationship between bond yields and the currency, and especially the dollar. But the dollar is the 800-pound gorilla in the Forex trading world. So let's go back to getting our charts ready for this next week. We talked about the trade I made. We talked about the trade I missed. So let's go back down to Forex trading. Let's see what we're going to do next week. This is a really strong uptrend on the euro versus the dollar. Now, as you see, I get to redraw my. This 4-hour trend line is a mess now, thanks to that last move that was done by the okay, so now that gives us a very strong upward triangle going on. Now, if you really love technical analysis as much as I do, you could say this is going to build into an ascending triangle and then drop like a rock after that. 1, 2, 3, 4, 5, but I don't see that. We've got a weak high right there. We've got bond. If the current bond yields in the United States continue to go down, right now they closed Friday at 2-year bond yield closed at 3.886, which also have been rising lately. We've got bond yields rising again, which means inflation could be coming back. Again, short-term reaction to Trump tariff talks and deals with England, China, and Vietnam that I think went down last week. So we've got more action going on with that. First, let's go back out and do this right. Let's go back to the monthly and adjust our monthly lines if needed. Well, look at that. Okay, monthly resistance. Yes, we do need to change this one a little bit. So monthly resistance trend line is now going to be about right. So jumbled, I almost can't see it. But then we've also got a lot of selling pressure right here too, around 120, 120.7. So you might see a couple of hundred pips more in that, unless it breaks out of this trend line again. If it breaks through this area, then it could go back up to highs of 124. I remember 124 when I was a broker in 2003. Pardon me, it's 2005. So that's within the realm of possibility. So it's still respecting the monthly support trend line. So let's go down to weekly. Right there. It's going to be a long video. I like it. And go to weekly, monthly, weekly. That's how that works. And the weekly one needs to be adjusted a little bit. So it needs to pull this other point down to here. That's still respecting the weekly trend line. Weekly trend line is still basically being respected, but it's funny how we've got this this selling. A lot of sellers come in around the 118 area, and these two trend lines, these three trend lines converging right here. That's very interesting to me. So we could see a lot of downward action too. One thing's going to happen: the market is either going to go up, down, or stay the same. Which one? I don't know, because I can't predict the future, and neither can anybody else. Let's see. I think everyone is getting used to Trump being in office and to his activity. So there's not going to be as much panic trading, I don't think. Okay, the daily, this 4-hour support trend line could come out to be our daily one, and pull this out to here. And then I want to change this to daily, because that is spelled support correctly. There we go. That's a nice chart right there. Nice little trend line, how it's respecting the daily trend line. 1, 2, 3 touches, and then it breaks out some more around around 114. That's old news. 115 is where it broke out again on this one. In this change of character area is where it broke out again. So again, I'm new to smart money concepts, but I'm using this plugin to just see how it works, and it seems to be working very well. Let me see. After this, we want to go to our 4-hour and see what's going on there. 4-hour trading on the euro versus dollar, and pull this down here. And yes, these are totally off the cuff. So this one, we're going to put a new 4-hour trend line right here. No, I don't want it on the close. There we go. I want it on the close right there. And this one we'll call the, so I can find the line on it. There it is. Add text, yes please. 4-hour support trend line. Call it the dollar symbol, support trend line, because it's not caps right there. That needs to be lower. There we go. And up here, then I could draw a trend line here, try and give us a little bit more of an indication of when that could break out. This will be red. So again, we're converging on got a little triangle action going on right there. By triangle theory, I think if it touches the top one first, that indicates the direction of what the move is going to be in traditional technical analysis. However, those are not guarantees, so I would not don't think I would bet 100% on that yet, and just wait. But you want to wait for a breakout on this. You've got 1, 2. You're not going to get. You may not get a third touch. Third touch may be the breakout on that one, as if you're going completely with Victoria Duke's methods of doing things. So we're looking at a possible buy coming in around 118. It's a psychological level. I do not like coming in at a psychological level. Probably want to come in around 118.14 on to the north, and to the south. I don't see a lot of opportunity to go south on this. So I think we're going to see an upward movement coming in about 118.14. Might be a good place to place that trade. Better yet, I'm going to change that to an alert. Can't put text on there, can you? Remove. So we're looking at possibly coming in at 118.16. It's currently 40 pips below that. That is, I think I'm going to put an alert on that this time, so that way I won't miss that. And you could possibly go with a buy stop on that. That's not unheard of. So set alert right there. So we're going to alert set at 118.14. So let's see what else we've got going on. On the dollar versus the yen. Let's see what we've got going on here. And I may want to set up trades as far as that goes too. First, let's go back to our monthly chart. Do these right, because if you don't do these right, if you don't set them up correctly, then they're not going to make any sense to you. Both the monthly support trend lines are being respected, so we're not going to have to redraw those. Let's go down to the daily, or the weekly first. And the weekly, I don't even think I have weekly support lines drawn because they're supporting these others so well. The monthly support line is doing great. daily trend lines are also being respected as far as the weekly chart goes. Daily charts right here again. Totally respecting the trend lines. 4-hour trend line, we've got a little triangle action going on here again with the 4-hour support trend line. Pardon me, the 4-hour resistance trend line. I think I want to take this one out. That one is just, I can't tell what's going on with that. Take that out too, because that is not a 4-hour trend line that makes any sense anymore. However, we are going to draw a new one. Oh, wait, this is daily. Okay, so daily is both those are being respected. Let's go down to the 4. It's also interesting to see how the pitchfork works out. I've always been enamored by the pitchfork technical advisor. Henry! Okay, so here's what we've got for the 4-hour trend line. And it is all sorts of different. So we've got this one, it comes up here. Let's come down, touch this close right there. And this is the 4-hour trend line. And we've got 2 touches on that. A lot of selling pressure on this, by the way. A lot of selling pressure on the dollar versus the yen. So that might be the direction we want to talk about for next week. And again, something's going to happen because we keep forming these triangles. Those trend line triangles, and they're all converging right around here, that's kind of interesting. That's kind of bizarre, but 144.55 closed at 144.56, so right at Friday's close. Something might happen. What's going to happen? I don't know, because we don't have. You trade what you, as Michael Boutros with Forex.com says, you trade what you see, not what you think is going to happen. So that's what we do here, is we trade what we see, not what we think is going to happen, because we don't need to be thinking. So that's the biggest thing with trading for me is thinking too much. And if you think you can predict the future, guess what? You can't. Let's change that one to green, because anything can happen in this crazy world. So we're seeing a lot of convergence here on the 4-hour chart. Again, and this could go either way. It's could go north, south. I don't know what's going to happen really, but this is where we might see some trading activity this week going ahead. And if the euro dollar is going north, then I'm going to want to say that the dollar versus the yen is going to go south because of the inverse relationship. There's a lot of buying pressure here, though, right under here, right around 142, and a strong low at 142, and another strong low at 139. So I don't see it going too far, but they could see some trading action going on there. And something I did not talk about was the schedule, but I don't really like talking about technical analysis, about fundamental analysis, because the technicals is kind of what I like to do. Is the technical analysis. We do have a change of character, a bullish change of character right here, which could indicate a continuation of the dollar versus the yen breakout. I don't think I've ever seen the dollar versus the yen and the euro versus the dollar go up at the same time. I have seen the euro versus the dollar pause while the dollar versus the yen went up. I have seen one of the two pause and the other one take the highlight, or highlight the week's trading, but who knows? We'll see what happens. Well, I think that should be a good wrap for today. We talked about a lot of things. Oh yeah, we're also have not talked about this yet. This is the DX trade platform. If you're going to get into proprietary trading, this is the only platform that is allowed by the CFTC. So this is the platform that you're going to have to proprietarily trade on. As you can see, I have an account. This is not for a trading challenge. It's just so I can get used to the platform. With audacitycapital.com is where I started this account with. It's totally free right now. I'm on the free trial, and I'm going to play around with the DX trade platform and get used to it before I start my first test. I forget what you call them. Oh well. So Audacity Trading, highly recommend it. Talked to him last year on the phone and gave me a $200 phone bill. So don't try to call him on the phone because it's going to cost you a lot of money. Because I'm in America, they're in England. So don't do that. I hear my fiance chuckling right now. That's not even the, that's not even, Audacity Capital. Here we go. I've not done my first challenge with them. Oh, or Audacity.capital is their domain. It's a pretty pricey domain too. Oh well. So this is where I'm starting my proprietary trading challenge. I'll be starting one of these challenges here soon, and we'll see what happens. I am not I do not earn any money for talking about them. I don't earn any money for talking about anybody at this time. However, that could change. That very well could change. So that's what we got going on. If you like this video, then like and subscribe it. That gives you a good idea of what's going on with this next week as far as trading goes. This has been a kind of a lengthy video compared to my last ones, but it's always fun, and they're always fun to make. So you guys have a great one. Happy trading, and we will see what happens next week. Talk to you later.